Welcome to the Daily Exchange. We're talking about utility tokens and security tokens and the future with Carlos from Securitize today and the group that owns now 1% of Bitcoin. We'll see you guys right after this. We're having a little it's the logo. Welcome back, guys. We're here. Just wanted to announce firstly, just right off the bat, Crypto Finder here. We have launched let's try that again. We have launched a stocking stuffer book on where we talk all about cryptocurrency. It's called What is Cryptocurrency? The book has been written by all the guys here at Finder. It's incredible. You can buy it on Amazon right now. Joel, I don't know if you can bring this up. So the book is a complete guide to Bitcoin and blockchain. You can see it's filled literally to the brim with everything that we know about this. It'll give you the best explanation. If someone needs to understand quickly anything there is to know about blockchain and cryptocurrency, do head on over and do check it out. There is a review on Finder. Just type in what is cryptocurrency. The new book has just been released, guys. Check it out, and you can pick it up at Amazon right now. All right, moving on. Just giving a quick market update. Bitcoin is bubbling around at around $3,750. Ethereum at 102. EOS down 9.5% to $2.23. Bitcoin Cash, it is down a lot, 13%. I think that is the ABC. Bitcoin SV is only down slightly. Ripple down 3.7% at 33 cents. Binance Coin is up, which is interesting, and Ethereum Classic is down 8%. Ethereum Classic having that news yesterday that their development team has not been able to be funded, and that can cause some serious issues. Just talking about Bitcoin for a second, the Greyscale guys have come out, who are part of the digital currency group were formed in 2013, have come out and said they own currently 1% of Bitcoin. That's intense. They own 203,000 Bitcoins. That is 826 million US dollars. Joel, if you want to bring this graph up, this is the Bitcoin holdings from Greyscale right now. This dip has allowed them to really acquire a large amount of Bitcoin, as you can see, continuously acquiring and buying up through this time period. It has been, it's just sort of come out of absolutely nowhere. That's super bullish in my mind. They've increased their holdings by 20% this year. They also own, Digital Asset Group also owns part of CoinDesk, Coinbase, BitPay, and Ripple, which is, again, very, very strong. The Waves network has come up with a new wallet. It's currently trading at around $2. It's gone up 30%. The latest mobile wallet, which has been responded with a lot of excitement. It's got multi-currency support. It's got all sorts of things. It's actually really, really quite neat. We've got a little video of the release here if you want to check that out. Whoa. Back. Yeah, I think it's really cool. Cool app, cool video as well. And I just think Waves UI is kind of cool with all its waves and... moving on. Nexo has come out with a $1 million worth of dividends that's going to be paid out to token holders. It's only been live for 6 months. Joel, if you want to bring this up. We've got total dividends, it's almost $1 million. Almost $1 million. That's going to be paid. The dividend declaration date was on the 3rd of December. Ex-dividend date is on the 5th. Record date on the 5th, and the payment date will be on the 15th of December. It's going to be a massive amount of loans that come out. The payout per token has been calculated yet, but it does look like the Nexo token took quite a dip after the dividend was paid, dropping what it looks, I guess, I'm going to pitch that at from about 12 or 13 cents down to about 9 cents, which is, pretty normal in the stock market as well. Want to introduce our guest today, Carlos Domingo, co-founder and CEO of Securitize. Carlos, welcome to the Daily Exchange.
Hi, James, and hello to all the Finder viewers.
Just quickly, Carlos, to give you a bit of background, you run Securitize. It's a platform which helps people tokenize assets into security tokens on the blockchain. And recently, obviously, we've been talking a lot about security tokens. Just quickly, Nexo is, I guess, paying out a dividend. It does seem like it's a security token. Do you have any views on Nexo?
Well, as far as I know, they did sell the token as a security token. What I don't understand is how can a security then not being, treated only on security token exchanges that have licenses to trade securities, like ATS license in the US or MTFs. As far as I know, the token actually doesn't have any transfer restrictions. So if you actually own an Nexo token, you can actually transfer it to another wallet. So you could be giving the security to someone else that is not allowed to hold the security. I saw also that they did kind of like an airdrop of Nexo tokens, which airdropping securities is probably not a good idea. And at some point, the regulators are not going to like that. And if they don't hold the tokens, I don't understand how they're going to pay a dividend, because they might be paying dividends to someone that shouldn't be holding those tokens. So, yeah, I'll be interested to see how the token evolves, because if it's a security, it's not about only issuing and selling it to accredited investors, but you have to manage the life cycle of the security all the time and make sure you know who holds it and that all the trades are compliant. And I'm not sure that token is behaving that way.
Mm-hmm. I hear what you're saying. Well, I guess just briefly, Carlos, obviously you're very focused on securities. Do you want to quickly give us a quick rundown on what does Securitize do?
Sure. We are an issuance and lifecycle management, platform for security tokens. So we will run the process of basically, onboarding investors that want to acquire a security token, run the KYC, AML accreditation process, let them view the documents of the offering after they've gone through the necessary disclaimers, sign the subscription agreement when they're buying the security. So there's a paper trail, digital, but basically, signature documents of purchasing a security, send money, whether it's fiat through escrow accounts that integrate, or whether it's crypto through custodian services. And then eventually, once the process is done and you have the investors ready, we will basically create the smart contract that represents the security. This smart contract is issued under a protocol on the blockchain that we call Digital Securities Protocol. And what this protocol will guarantee is that the security stays compliant all the time. So we will, depending on the type of the offering and the type of registration or not registration that the issuer has done, and the jurisdictions that where the investors are, the smart contract will basically control the transfer restrictions to make sure the token always stays compliant, not just when you issue it, but also throughout the life cycle of the security. We also facilitate that, once the token gets traded, we're integrated with exchanges, so we can make sure that those trades are compliant. We can then reconstruct the cap table back so that the issuer always knows who the token holders are at all time, even if it's being traded on the secondary market. We facilitate that they also conduct proxy votes or issue dividends like Nexo is doing, etc.
So just to clarify, so Securitize is its own blockchain, or which blockchain do you run on?
No, we run on top of Ethereum, which is what I would say most people do today. Obviously, we all know about some of the limitations of Ethereum, especially the scalability piece, which we suffer every time we issue tokens, because it typically will take like longer than a day to issue, millions of tokens on the Ethereum blockchain, especially with a complex protocol like ours. We're now actively looking at supporting other blockchains. One of the investors in our round was Ripple, so we're now very closely looking at XRP Ledger as a settlement layer. for transferring security tokens. And we've been approached by, pretty much every major blockchain to look at, will it make sense to port our technology there and start issuing security tokens on other blockchains.
Right. And so how long has Securitize been up and running and for now? And what have you sort of tokenized so far?
Good. So Securitize started under a different umbrella, if you want. I founded together with two partners a venture capital firm called Spice VC. This was back in, before summer last year. And at that time, we had the idea of tokenizing the fund and issue a token that represents the economic interest of the fund. It's like an LP. It's tokenizing the LP interest, the limited partnership interest on a VC fund. In May last year, there was a company, Blockchain Capital, who actually issued the first security token ever, the BCAP token, which is very, very well known. So we look at how they did it, found that, things that we could do different, improve, etc. So that led to the idea of tokenizing this VC firm called Spice VC. And then when we went out in the market, we couldn't find anyone that had a working product that will allow you to actually tokenize an asset and issue security tokens. Keep in mind that this is more than, it was like a year and a half ago. That was at the peak of craziness of the ICO security tokens, and people were not interested in security tokens. They were not a thing like now. So we still felt that was the right thing to do. And I remember joking with my partners. We had a number of goals in the project. One of them was not to go to jail, and we knew that if we were issuing a security as a utility token and sell it to people that shouldn't be buying a security, we could get in trouble with regulators, which I think now most people realize about it. So we decided to then build our own tokenization platform for the fund. So we hired a CTO, Shai, who is now the CTO of Securitize, and a small engineering team, built the basic product to basically tokenize our own fund. And then when we went out with the project in September, a lot of people started reaching out and saying, "Wow, this is very cool." Remember that in July last year, June, July, the SEC issued the first DAO report saying that ICOs look like securities. And more importantly, some people in the industry started saying, well, tokenizing securities and digitizing securities on the blockchain could bring a lot of advantages. So a lot of people reached out to us, and we saw the opportunity. We had a working product on a market that seems that was going to explode at some point in time. So we spun out Securitize from Spice VC. The company was incorporated, around a year ago at the end of November, 2017, and we launched officially in January 2018 at the North American Bitcoin Conference in Miami.
Cool. And so, what sort of things have you tokenized so far?
So we started with Spice VC. Obviously, that was the first project. As I said, where the project originated. So a few of the first customers that reached out to us were actually funds that wanted to tokenize things. So we've done a project called 22X, where we created a fund that contains equity on more than 20 companies that went through batch 22 of 500 startups. So basically, you're buying a token that is indexing in 22 in 20 some companies coming from Silicon Valley that have already been vetted by one of the top accelerators and incubators. We recently migrated the original BCAP token from Blockchain Capital into our platform as well. And since then, we've been signing, I would say, two types of deals: funds that want to tokenize, operating companies, some of them from blockchain space, some of them not from the blockchain space, which is kind of even more interesting. And then recently, we've seen an uptake on real estate. I think real estate is going to be one of the main areas of tokenization that's going to be happening.
Very cool. So, I guess a lot of people are talking about this difference between utility and security tokens. What do you think the benefits are right now of doing a security token offering?
Well, first, doing a utility at ICO is the benefit. There's no benefit. There's actually downside because, as it became very clear recently, the regulators are going to go after you because they're basically illegal, because offering something in exchange of value for people that are just basically looking at speculating with it and benefiting from the work of others, that's clearly a security. And irrespective of whether the token has utility or not, the people buying it are not buying it to use it, they're buying it to speculate with it, and that turns it into security. So I don't think ICOs will continue happening, at least not on the proper jurisdictions where the regulators already have said that. So the alternative is to do a security token offering. But I think that security tokens are more than just making ICOs legal. I think security tokens, or how we like to prefer to call them, digital securities, are a better way of digitizing securities using blockchain technology, which happens to be a very good platform to do that.
Makes sense. All right. Well, in terms of, I guess, do you think security tokens are going to replace utility tokens?
I think they're two different things, right? So I think that utility tokens, in my view, they have a very legitimate usage when you have a truly decentralized structure. So there's no proper company. Like, think about a decentralized Uber, where Uber at the end of the day is an intermediary. So the same way that Bitcoin disintermediates banks by being able to transfer money peer-to-peer, you could think of like a network that disintermediates Uber by matching people that want to take a cab with the taxi drivers and arranges for them to do the trip and do the payment in this kind of decentralized, where there's not a money that information out of it. You have to have an incentive for people to participate on that network, and this incentive is what a utility token is. There's a lot of utility tokens that make no sense because they just used to pay for a service, so you might as well pay with not a proprietary token, but with any of the existing cryptocurrency of fiat. Those, in my opinion, make total no sense and will go to zero and will disappear. But there's some legitimate usage to them. I think Bitcoin example of how the Bitcoin as a token itself is what sustains the network, because the miners participate in the Bitcoin network because they get Bitcoin. So I think those are very legitimate. What I don't think that will continue happening is that people will use that as a fundraising mechanism, because I think the regulators have made it very clear that that those are securities and it's illegal to conduct ICOs and regulate ICOs selling to retail customers the way that people have done it in the past. So I think for fundraising purposes, people will start looking at security tokens as the way to fundraise and capital formation, as opposed to use the utility token for the fundraising itself.
And just you talked about Uber there. There's recently James Edwards was in Berlin, one of our team here at Finder, in the TechCrunch Disrupt, and he talked about a new startup called Rider, which is a blockchain platform aiming to, help with the disintermediation of ride sharing. And this is an interesting one because they've used a utility token and a security token. I think, Joel, you might have a screenshot here of it and some footage. I don't know if you want to spin that up. So it's kind of like Uber-free ride-hailing service for self-driving cars and drones. Pretty cool stuff. But I want to talk about this. I don't know if, Joel, you want to spin the video for a sec, and we'll come right back to Carlos in 2 seconds. And I think what's interesting about this is, again, they've used both models of utility and security. So it's a dual token. If you want to, we'll talk about that in a sec. Just 2 seconds. Let's have a look at the footage here.
And so I know that you're planning to do a token for it, but you've got a pretty interesting approach to solve the issue that a lot of utility tokens have now, which is when people aren't using them, they're just speculating on them. So what's your solution there?
Yeah, exactly. We saw the issue that when we have a utility token design, usually what happens is that investors want the token price to go up, and actual users want the price to be stable. That's why we came up with a design of dual token. We have two tokens. One token is given for the investors, and another token is used as a means of payment.
Yeah.
So that utility token, which is used as a means of payment, has a stable value, and investors, they get those utility tokens for their investments.
Okay. So it's still a utility token, it's not a security token?
For investors, it's security token.
Yes.
For the whole ecosystem as a usage is fully a utility token.
Great. I don't think I've seen anyone combining utility tokens and security tokens in the same ecosystem, so that's quite interesting.
Well, we will try to do that.
Yeah, well, I look forward to hearing more about it today.
Thank you.
Yeah, we'll get that one.
So we can overlay it.
Yeah, I think that's a really interesting approach.
Yeah, we do hope so, because we also look for a similar solution, and we thought, how should we do that? And we
That's very cool. I think our very own James Edwards there at the TechCrunch Disrupt talking live this week. And I think what's interesting there is, they're solving the utility token and the security token component. Carlos, I'm interested, what are your thoughts in the dual token model?
I think it's great. I think that's the right thing to do. So from what I understand of their project, Ryder actually has a legitimate usage for a utility token as an incentive mechanism for the network. But because they know that if they sell that to investors, they turn it into a security, and then they're going to run into all sorts of problems for the actual people to use it. They have create a separate token, which is the one they use for capital formation and to attract investors, and they are using both for different purposes: the security token for investors and for raising money and for managing the cap table and provide liquidity to investors, but the utility token for basically functioning the network and providing the incentive mechanism for the people that want to participate in this kind of decentralized Uber type of application. So I think that's great. That's exactly what I think people should be doing. If there is a really legitimate usage for the utility token, as I said, I think that there is a lot of utility tokens out there that, irrespective of whether they sell them or not to investors, they just don't make any sense, because to me, a token that is just to pay for a service and that's it. It doesn't require its own token, and it was used in the past to raise money. I think in the future this will disappear.
Makes sense. And so do you think that investors expect security tokens now going forward, and they won't buy ICO or utility tokens anymore?
I think investors are going to be very concerned about buying, utility tokens and participating in ICOs because they know the regulators are going to shut them down, and potentially, if the company needs to return the money and for whatever reason they don't actually have the money to return it, they can just go bankrupt and they lose all their investment. And I think even many of the companies that did ICOs, especially the ones that did it after July, if I was an investor and I hold any tokens on that company, I would try to get rid of them, because at any time the regulator is going to go after them and ask them to return the money, like it has recently happened to 2 ICOs already in the US. Even worse, there's companies in the security token space that did ICOs and issue utility tokens and even airdrop them to retail investors, which I think is crazy. So because they're having a huge risk of the regulator shutting them down. So I think from an investor perspective, they're better off buying a security token or figuring out a way they can eventually own and earn the utility token, but without actually participating on an ICO and just basically investing with an expectation of profit.
Makes sense. All right, let's talk about specifically then, what do you think makes a good project to securitize?
That's a good question. So first, in our current view, so if you think about the 3 advantages of security tokens, which are mainly capital formation, so you can do better capital formation because you can basically, it's kind of like crowdfunding on steroids, equity crowdfunding on steroids, and then automation of the cap table management, and the third one is liquidity. First, you need to have a certain size to benefit from these things. If you're a startup, raising $1 million for a $5 million valuation, a seed capital or a small Series A, I would advise them to do a security token, and this is not the kind of project we will take. It has to be at a point in time that the size of the raise and the maturity of the company makes sense, because this is kind of like a mini IPO, if you want, or something that could replace IPOs. So obviously not all companies are ready to that. The second thing I think is you need to be in a space where liquidity matters, right? Because one of the main advantages of security tokens is obviously liquidity and the automated compliance that provides increased liquidity. And then if your project doesn't require liquidity, and if liquidity doesn't bring you a price premium, then don't do a security token because you're not going to benefit from one of the main advantages of the security token. So things like real estate, VC funds that could benefit from liquidity because they could attract capital that otherwise wouldn't participate on the project. I think they're good candidates for security tokens.
So you talked at Polycon 2018 this year, and you were saying getting hundreds of leads for security tokens, which is fantastic. Are there any projects that you would sort of look at and reject, that you would say these are not right for security tokens?
Oh yeah, definitely. We just were. I was last week in San Francisco with my team, and we've been looking at hundreds, close to 1,000 leads that all came inbound, and we've only selected, I think this year we're close to 22 customers. So it's a very small percentage that we do, and the way we do it to handle all the volume is basically we have a form that is connected to our CRM where there's a number of questions, And then, unless you have certain metrics that we think the project is going to be attractive, then it gets automatically rejected. So we send an automated email to people saying, thank you very much. We are at capacity and your project doesn't fit our current focus. So try to treat people nice, but basically don't take the project, because we're trying to take only quality projects. We're not going for volume. That's not what we are. And I don't think that's what the industry should be doing at this point in time. You should be promoting quality projects to make sure investors understand the advantage of security tokens. Then after that, when the ones that kind of pass this filter, these are the ones we personally engage with them. So we'll set up a call, trying to understand more about the project, do some due diligence, both on the project and on the people involved in the project, because the other thing you have to be very careful in this industry is there's a lot of bad actors. Try to understand why they want to do a security token. We don't like the projects that are doing a security token because they were incapable of raising money in traditional ways, and they think this is maybe figuring out how to raise money. And I think those are not good projects. And then obviously, do a demo of the project, tell them about the, our pricing and our business model. So to see if this is something that's going to work for them or not. And if everything, moves forward, then eventually we sign a contract with them and install the project.
Makes sense. And so what projects like that can you name some projects that you are working with right now, or the types of projects?
Yeah, definitely. So besides the ones that we have, already issued, like Spice VC, Blockchain Capital, 22X, Oakmate, which we issued recently, these are projects that have been announced that they are using our platform. CoinMint is a project we like. It's the largest data center in the world for Bitcoin mining, and they have designed a token that we have built, which is very innovative because it's a security token that buys you hash power into the mining operation, and that is connected directly to the mining pool that they're using. So you actually get like daily payouts in Bitcoin into the token. So we think it's very innovative, and these guys, have probably one of the best mining operations out there. It's a very large data center. They have access to a lot of power at a very, very affordable cost, and they know how to source hardware and everything. So that's a very good example of project we like. Another one is lottery.com, which is an existing business. They've raised VC funds before, etc., and they wanted to fund a new line of business, which is this raffles, charity raffles that they were around the blockchain. So they had the idea of issue a security token that will have a revenue share. We've been working with them for a few months already on the project, and they're about to issue a token very soon. So again, we like that. It's a mature company with an existing business. They prove they can raise money, so they do the security token not because they can't raise money, but because they want to do something different. They really believe on the space. They've been advocates of the security token space. The token design itself is innovative because it's a revenue share against these charity raffles. So that's the kind of project that we like.
Sorry, what was the name of the mining token again? Sorry, I think
it's called CoinMint.
CoinMint.
Yeah, coinmint.io. You guys can check it out.
Cool. And all right, well, let's talk about a little bit about laws and regulation. What sort of laws, are you sort of trying to, work with and comply with versus, a utility token where they're not really, working towards those?
Yeah, utility token basically doesn't comply with any laws. So most of our projects are what is referring the industry as unregistered securities. So these are securities that have not been approved by the regulator. And then this is legal. It just happens that the regulators, when they don't approve a security, which means they haven't, revised all the documentation related to security, etc., they place restrictions as to whom can actually hold and buy that security. So therefore, as unregistered securities, what we need to be looking is at that particular those particular laws in those countries. Some countries are not allowed to issue unregistered securities, like Japan. Some countries like the US, they have quite a flexible, legal system with respect to unregistered securities, because you can even do global solicitation. But on the other hand, you're restricted to sell only to accredited investors, so you can't sell to retail investors. Europe is a bit different. So those are the kind of jurisdictions we look. What's important to understand is that the jurisdiction you need to be looking at is not only where you actually issue the token, but is where the investor is. Because regulators care about protecting their investors, right? they care about not, the investors in their countries not being scammed. So when I hear people like, oh, I'll do the token, in Malta or in Cayman, and then there's no problem, that's not true, because the moment you onboard a US investor, a UK investor, a Spanish investor, you have to understand the laws of how you sell and register securities to investors in those countries. And that's what we actually look at and what we have built into the platform.
Makes sense. And so who can and who cannot participate in a I guess a security token offering?
Well, it depends on your jurisdiction. So it depends on where the investor is. So each regulator has different rules as to how investors can participate in private placements, let's say, because these are kind of like private placements. And those are the ones you need to look at. Generally, I would say the common thing across all jurisdictions is that regulators are very sensitive towards retail investors, because they know retail investors have less, money to waste, and therefore they don't want retail investors to be a scam. They're less sensitive towards, accredited or qualified investors, because those guys have a lot of money. They're supposed to know what they do and to have enough means to basically evaluate those projects, and they also have more, money to lose if they lose the money. It's not as big drama as retail investors. So I think that the common theme across all regulators is to protect the retail investors, and therefore this means that most of the time the restrictions is that either only accredited or qualified investors, which again the definition changes country by country, or the retail investors are the only one allowed to participate in this offering.
And so is it up to the seller to make sure that they're allowed to sell to them, or is it up to the issuer to make sure that they can hold them? So if it's traded on an exchange, who's responsible here?
So there's two scenarios. One is the primary issuance. So that's when you actually raise the money and issue tokens for the first time. At that point in time, many companies use a broker dealer to sit in between them and the investors, and then therefore the broker dealer is the one that has the responsibility to make sure they're onboarding the right investors. Sometimes the issuer doesn't use a broker dealer, so we will provide the tools for the issuer to conduct that in a compliant way, but ultimately is the responsibility of the issuer. So let's say if you have to do KYC, and then the KYC process fails because I don't know, the name doesn't match the passport or something like that, the ultimate person that needs to decide whether they approve that investor for investing is obviously the issuer or a broker dealer if there's a broker dealer in between. If there's an AML warning because I don't know, you have an issuer called Pablo Escobar and gets flagged because he has a famous name of a Colombian drug dealer, but might be someone else that just happens to be named Pablo Escobar, it's up to the issuer to take the decision to conduct more due diligence to approve that investor to invest in. Now, once you've issued the tokens and they go and get listed on the secondary market, then the exchanges, which in this case they're not really exchanges, they're marketplaces, are the ones that are responsible for providing the compliance. And in many cases, they will rely on the smart contract, which is in our case, in our protocol, to provide them with the information about whether they can approve the trade or not, because the exchanges might not actually have visibility about all the restrictions of the security, especially when the token gets listed across multiple exchanges, or whether some tokens are being traded but some others are not, and an exchange doesn't actually have visibility about the rules. Like say, for instance, in the US, if you don't want to have more than 2,000 shareholders, so you don't trigger filing restrictions, for an exchange, it's impossible to know whether there's 2,000 or 1,900 or 1,500 token holders at a particular in time, but we know because we issue the token and our protocol actually tracks all the token holders all the time. So exchanges will basically integrate with us for us to provide them that information to approve the trade.
And so how do you manage, I guess that jurisdiction? So say someone from the US is buying into a Malta coin or whatever it may be, and given that I'm assuming there'll be decentralized exchanges as well. How does the protocol handle that geographic regulation, I guess?
So the exchange needs to onboard the investor, even if they are decentralized, like let's say our Swap, which we're working with, they still have a broker dealer which onboards the investor for buying or selling a security. and then the exchange will integrate with us, and it will send to our protocol on the blockchain what we call the non-personable identifiable information. So we don't get to your name or you don't get your passport, but we'll get, whether you have passed KYC or not, and what the expiration date is, whether you've been approved ML, whether you're accredited or not, or qualified, and what's the expiration date of this accreditation, because like in the US, it expires in 90 days, and the jurisdiction, okay? That's the most important thing, because based on the jurisdiction, we can then apply the rules. So we will collect that information from the two ends of the trade, the one that wants to sell, the one that wants to buy, and then these will come, the exchanges will integrate and send us the information to our protocol on the blockchain. And then based on the current, cap table and distribution of token holders and looking at the seller and the buyer, then we approve or reject the trade.
Makes sense.
Applying, whatever are the trading rules for that particular security. So for instance, if you're, a UK investor and want to sell your tokens and you want to sell it back to a US investor, but it's within the first year of issuance, we'll block that. Even if the US investors and accredited investors would theoretically hold the security for an unregistered security, we will block that because that's called flowback, and therefore you're not allowed to, on secondary market, go back and sell to the guys that on the primary market, they had a 1 year lockup and things like that. It's very complex. There's lots of rules. There's a little bit of lack of clarity sometimes from the lawyer side about which rules apply or not. So we constantly working with multiple law firms from our side and from our issuers to make sure we code the right set of rules, the compliance code to make sure when something happens, it's all done legally.
Makes sense. So with why do you think hosting securities on the blockchain is better than the existing legacy systems?
That's a good question. So I'll say first we need to distinguish about two types of securities: private securities and public securities, because the problems that blockchain solves are different in the two cases. So let's start with public securities. So public securities used to be what people used to do, right? So public securities, people used to do IPOs very early on when companies were young, and this is what happened during the dotcom time. The public markets, they've been basically shrinking the last 20 years. In the US, this half the number of publicly traded companies that used to be there. And then public securities used to be paper-based until the 70s. So they used to actually trade by physically moving paper, and the stock exchanges used to open like 4 days a week because they basically needed 1 day to settle the trades and move the securities around. Obviously, this became very inefficient and it almost collapsed the market. And it also created a lot of risk because the fact that you're buying a security, but the trade actually doesn't settle and it takes like 2 or 3 days because you have to move paper physically from one place to another, it leaves a space of time open for the price of the security to change or the company to go bankrupt or be acquired and completely change the value of the trade, right? So then securities got digitized in the 70s, and the way they got digitized was not very efficient because they basically decided to create a centralized entity that will hold all the securities, okay, which is in the US is the DCC. And then these central depositories will hold all the securities, and what people are actually trading is not really the securities, like the rights on the security. And then those are traded by brokers, which are on exchanges, and the actual issuer doesn't even know who holds their securities. So if you're Facebook, if you look at the annual report, they will list like 3,500 shareholders. It's a company worth $600 billion. So obviously they don't have 3,500 shareholders. They have millions of shareholders, but they have no idea because someone like Fidelity, which probably trades a lot of the Facebook shares, will just basically list Fidelity as one of the shareholders because there's a bunch of, Fidelity, customers that are trading those securities. So there's a lot of inefficiencies. Companies don't know the cap table. They don't kind of conduct proxy votes. Or they cannot issue dividends in an efficient way and usually cost them a lot of money. And the main reason is because there is no instant settlement. It's not like you hold the security, I want to buy it, and you pass it to me, it gets approved, and then instantly we transfer the ownership of the security. That's not how things work. You don't actually own the security. The trades take 2 days to settle. They used to be 3 days until fairly recently. And in between, as I said, there's a lot of what is called the counterparty risk of the trade not settling, which has created a ton of intermediaries that try to manage the risk and obviously charge for it, etc. So it's known that there is a $80 to $100 billion inefficiency in the way securities are being traded today publicly. And the blockchain can actually solve that, right? Because it's basically a universal platform. Anyone can go there. It's decentralized, but provides trust. So you know that it cannot be manipulated. So if I trade a security and I settle on the blockchain, it's done, and no one can go and then modify that trade. And this instant settlement also eliminates all these inefficiency. It provides auditability, trustability of all the trades. So even for the regulators, it's actually a much better situation because they have visibility about what exactly is happening with a security. So that's for publicly traded shares. Private shares are even worse, right? Because there's no liquidity, and that's the number one problem. And if you want to, bring liquidity in the secondary market of private shares, it's not a matter of 2 days settling. It could be like 2 months settling a transfer, because you have to figure out whether that share can actually be transferred or not, who had right of first refusal, who are like the different, investment rounds they did, and the different rights of shares that were issued. So usually there's a broker there that someone holds it's called an ATS license, which will look at this to basically approve the trade and look at both ends of the trade and etc. So there's extremely inefficiency, and they are extremely illiquid precisely because of that. So I think for private shares, the main advantage is not the automation or the cap table, let's say transparency and instant settlement that you can provide, but it's actually the providing liquidity to a otherwise extremely liquid market.
Makes sense. So faster liquidity and getting it out there makes sense. So tell us about fractional ownership of I guess traditional single owner assets. So if you want to buy something, a stadium, and now it was a little more difficult. You'd have to split up into smaller parcels of shares, but now you can really own a tiny little piece of the Red Sox arena or whatever it may be. Do you think this is the biggest opportunity for security tokens?
I think that's definitely one of them. The lack of fractional ownership basically, eliminates liquidity to the asset and depresses the price. Like, so if I own a Picasso, the Picasso is worth, let's say, $5 million. First, I need to find someone that likes paints and collects art and likes Picasso, and second, that has $5 million. So there's very few people in the world that actually can access the asset, and it makes, if I need to get rid of the Picasso because I need the money, the only way to try to find a buyer is by basically depressing the price of the asset, and that's what's called the liquidity discount. So by fractional ownership, then you're basically expanding the pool of people that can actually hold the asset, because now instead of looking for someone that likes a Picasso and has $5 million, I can look for someone that likes a Picasso and has $1,000.
Yep.
And then I need to find many more of those guys, but obviously the potential market of people that likes Picasso and has $1,000 is massive compared to liking a Picasso and having $5 million. And that suddenly I can fractionalize this asset, and I can provide fractional ownership to lots of people, so I can actually sell it without having to discount the price. And
Makes
that's
sense.
major.
So right now you've got plans for the first digital security offering in 2019. A DSO, I think the word STO is also a security token offering has been bandied around. I'm not sure what the best terminology there is. Do you think this is going to replace an IPO?
Yeah, just go through the terminology for a second first. So the company has been referring to this as security. The industry has been referring to this as security tokens, because they basically kind of like, came from the utility token, space, and was referred to as security tokens. And tokenization is something everyone in blockchain is very familiar, etc. Now, we tend to use digital securities because we think that that's a better term for bringing institutional investors into the mix, because the moment they hear the word token or crypto or whatever, they freak out. They think this is a scam and blockchain and blah blah. If you just tell them, look, I'm digitizing your securities, you're still buying a security, you can still analyze this from the same perspective as the purchasing any other security, with the advantages of like the potential liquidity, etc.
Yep.
And we just happen to use blockchain technology to digitize it. So we tend to refer to, instead of token offering or security token offering, to digital security offering. Now, in terms of replacing IPOs, what has happened in the market since dotcom time is the IPOs have been dying. As I said before, there's 50% the number of companies that used to be publicly traded today that 20 years ago, and the number of IPOs has been decreasing big time. And all the value today is created in the private market. Like if you think about companies like Uber or Airbnb, even Coinbase in this space, those companies in the 90s will have already been publicly traded, and all investors will have access to the growth and the value that these companies are producing, which today is completely on the private market. And the main reason is because IPOs, have become very onerous. The cost of doing it, the cost of maintaining a company publicly traded, the fees that you have to pay to exchanges and brokers, etc. They're exorbitant, and this has make people stay private as long as possible. We think that, but obviously being public is a very good advantage, right? Because especially for liquidity. So we think that especially for companies that cannot afford an IPO, but that will like to enjoy the benefits of being publicly traded, security tokens will be the way for them to achieve that, especially in the near future when all these changes launch and have liquidity. So we definitely see that it's kind of somewhere in between a pure private placement and a full IPO, somewhere in between a security token offering.
Makes sense. And so with you were very much part of the dotcom boom and bust, I guess, Carlos. You saw that
Yeah.
very personally.
I'm old enough to have been there already.
I actually am as well, even though I look like a spring chicken, I've been told. Chicken. Between, I guess, the crypto bubble and the dot-com bubble, do you see any parallels? What's your sort of, describe your sort of view and take on that?
Yeah, so the dot-com, there's a lot of similarities. So at that time in the 90s, I was actually part of that. So we took company public and I and then listed. So I went through that problem, and there was also a lot of similarities. Everyone wanted to be a dot-com, wanted to play the dot-com name.
I think, Carlos, we lost you for just a moment there. I think we lost you for a moment there. Do you want to repeat that?
Yes. So can you hear me now well?
Yeah.
All right, good. So what I was saying is I went through that. I was part of a company that I started that went public when we were very small and had almost no revenues, just plans, and the stock went up a lot and then it crashed and we got delisted. So I went through that drama, and it's very similar to all the ICO space now, where companies with almost no history and just purely a white paper back then was like a presentation. Will go do ICO and kind of get listed on exchanges and sort of go public, and then now the price of their token is tank, etc. And there was also similarities in sense of like a rush of people wanting to be there, and a lot of scammers and a lot of projects that make no sense, but just because they were using internet or they were a .com, they were raising money successfully. So I think the thing I've seen different now is one is first, this has happened a lot faster. So the .com actually lasted for a much longer period of time. Both the happened.
I think we lost.
I think that
lost Mr. Carlos.
The other thing that I see different in this space is that it became. You lost me again.
Hello,
can you hear me?
Now we've got you.
Hello.
Ooh, we're a little bit shaky. Carlos, come back to us, my man. While Carlos just fixed up his bits and pieces, we do have a. We've got you, Carlos. Now we have got you.
Oh, sorry, I don't know what happened. So I think it's evening here. I think one of my kids probably turned on Netflix or something and screwed my internet connection.
We're competing.
So
with,
I was saying that there was a lot of similarities. Perhaps the timing has been compressed now, but I think that I firmly believe that the same way that the dot-com was full of scammers and it was it went up and crashed, etc. If you look at 20 years after, it has created a tremendous amount of value, and companies like Amazon emerged from that. And if you see how their stock also crashed 90%. If you look at the stock performance since then, you barely see that happening. So I really believe that blockchain is here to stay, and that in spite of all the current troubles and issues, this is something that 20 years from now will be mass adopted and will be used both on the crypto side and the blockchain technology itself will be used massively by everyone, and that we will not remember this as just an anecdote that happened 20 years ago, and that probably will clean up a lot of the bad projects and bad actors in the space.
Makes sense. Carlos, we're going to have to wrap up there, but we do have one final question for you. We ask everyone on our show to make a prediction on midnight. I believe we are getting close. I think it's getting very close, actually, the 6th of December. So in the next 25 days, what do you think the price, and this is not financial advice, this is just purely an opinion, do you think the price of Bitcoin in US dollars will be when the clock strikes midnight this year?
I think it's going to be either higher or lower than it is now.
That's good. That's good.
I have no idea. I hope it's higher because I have Bitcoin, but no one knows that. And to be honest with you, I hope Bitcoin not thinking about what the price is going to be in December, but what the price is going to be 5 or 6 years from now, where I think that the technology will be more mature, will be used, and really the price long-term will appreciate. So the short-term fluctuation, I try to stay away from it, even though I know it's difficult, but I try to stay away from it.
Makes sense. Carlos, thank you so much for joining us on the Daily Exchange, and we wish you very much great luck in what you're doing with the security tokens and how you're growing and building the industry and really, bringing that next wave of securities into the cryptocurrency space.
All right. Thank you very much, and thanks for everyone that was listening.
Wonderful. All right, guys, that is today's show. We thank you so much for joining in. Do subscribe. Do click on the little bell just above, and you can check out and be notified when all of our episodes come out. That is the Daily Exchange, guys, and we'll see you guys tomorrow. Tomorrow it is. Yeah.